Hey everybody, this is Jim at SP500chart.com. It's about 20 minutes after 4 o'clock on April 10th, 2014. Let me read this to you, then we're going to take a look at a situation that certainly did a 180 today. The website and this video are for educational purposes only. Nothing stated at the site or in the video is intended to be used as investment advice. I can draw lines on charts, but you have to draw your own conclusions from your own research and make investment decisions that are suitable for your personal financial situation. I am not a licensed financial professional. I'm just a guy who draws lines on charts, and let me see if we can do anything here today. Okay, as ugly as these 2 days were last week, let's scoot out just a little bit here. On the Friday and Monday of this week, I should say, we looked like we were rallying up. It looked like we were gonna go run up and test this line at 1884. Instead, just encountered all kinds of trouble today. We had a very small inverted head and shoulders pattern right here, which, when we measure the target from that, let's see if that one came true. You can't blame this pattern. You can't say that little tiny inverted head and shoulders pattern failed, because it didn't. It actually got the S&P up to 1872, but once there, we just came straight down for about the first 2/3 of the day. Let's take a look at this really closely. Tell you what, we'll do it on a 3-minute chart. Coming down in this channel right here, had a little rally, and then we ended the day on additional weakness, which just happened to bounce at a back test of this line. Does that mean I think this is going to hold and we rally from here? You know, I'm not going to be so adventurous as to say that. The good news, if there is any, is that we are not technically significantly underneath 1840. But the bad news is, if we look at it on a daily chart here, that's our first close underneath that level since that level had been identified, and that's the first close underneath that level since we got above it. You can see all of these candles here from the last week of February on. Sure, we dipped down underneath it momentarily once or twice, but this is the first close underneath this this, I think, fairly important support area. Now, if we look at it on a little bit tighter time frame here, for what it's worth, you're probably looking at the chart and you saw this blue line. Well, that's just extending this line basically down across these tops, and it's about where we bounced today. Again, that's not a perfect line. We could put it here, we could put it there, because these 3 points that define it do not line up perfectly. So guys, just a ugly day, and I would be prepared at this point. If we get follow through selling, then I would expect, I would not be the least bit surprised to see us come on down to test the 1800s or even a little bit lower. And hopefully, if that does happen, that we will bounce there. So one of two things is going to happen. Either we are going to quickly recover and get back into our 1840 to 1884 range. That is possible, but that's going to happen quickly. If we get any follow-through selling to speak of at all, then I think we're destined for about 1800 as a first level to look for some trend line support. And just to remind you, we've got an extended neckline that could give us some support. We also have, need to go on a 4-hour chart here. We also have this extended, this kind of a mustard colored line right here that's got a pretty good history to it. Back in June of last year, October of last year, February of this year. So I think this has a decent chance of giving us some support. You can see, however, that we have really failed to get that nice move upwards. And by the way, this line just moved like crazy, so don't panic. You see what happens there? It just moves. So, but we've really failed to get up over that 1900 level, and I was hoping we would get up and at least get a tag in the mid 1900s, because we've got some resistance lines up there that haven't been tested for a while. So, just an ugly day. And to be honest with you, I'm just kind of throwing my hands up going, okay, I'm not going to panic here, but this was an ugly day. Now, if you're looking at this and you're saying, well, just tell me, what do you think would be a good sign at this point that that the selling is done with? Well, I thought getting over this line right here would be a good indication that our selling is done with. But obviously, even though we got a nice rally when we got over that line, that failed to give us anything of significant lasting benefit. So this is what I'm going to do. I'm just going to take our top right here and I'm going to throw it across this top at about 1872. We'll make this a unique color. We'll make it red. Nothing else red on the chart. So, if at some point over the next few days, if we rally and get over this line right here, then I would certainly be feeling much better about the chances for the S&P to recover and get up into the 1900s. But right now, I do not have a real good feeling about that taking place. With what I see today, even though we're not technically significantly underneath 1840, because we're only about 6.5 points underneath that level. If we get some follow through selling, then I would be looking for support down here around roughly 1800 or so. So just an ugly day. Did not do what I thought we would do, but it doesn't always work. The good news is we still got our lines, and we still have at least a chart that hopefully will show us where we're going to get a bounce and show us where we are going to reach that inflection point where we do head back up. So guys, again, rough day, really rough. So take care, hang in there. Let's see what might get thrown our way tomorrow and next week. Take care.